What's going on, guys? My name's Kenneth Dusang. This is the first time home buyer's blueprint. So if you are in the process of buying a home, or if you're planning on buying a home, watch this video. There's a ton of really good content here. You're going to learn the process behind buying a new house for the first time. And my name's Kenneth Dusang. I'm actually a licensed real estate agent right here in Oklahoma. And I help home buyers and sellers with real estate needs. I really love helping first-time home buyers, though. It's such an exciting time for them. Just seeing people just light up when they're looking at houses or getting the keys for the first time to their new house is a great thing to witness. I want to go over some very useful tips that you're going to be able to use in your home buying journey. I've helped hundreds of first-time buyers just like you. I know you're nervous to get started with this process, but here's the thing. Being nervous is going to protect you, and here's why. Nervousness is like a shield that is going to help you make good decisions, is going to help you not want to jump into things right away, because when you're buying a house, you don't want to make quick decisions. You want to take time and actually plan things out. So with that being said, you're going to want to be prepared. Do not go into this journey of buying your first house without preparing yourself first. Be money smart. I want you to sit down and take about 20 minutes and figure out a budget. So here are some tips on what you can do to budget. First, you're going to want to figure out what your net income is. This is after taxes. Do it after expenses too. So, like food, even down to toothpaste, toilet paper. What is your expenses? Make sure you budget everything. Now, what you're going to want to do is whatever your net monthly income is, you're going to want to take 30% of that, and that's going to be your max monthly payment for a mortgage. So an example, let's say you make $9,500 per month. What you're going to want to do is times that by 30%. And what that's going to equal is $2,850. So if you take out your calculator, put in your net monthly income into the calculator, and you're going to be able to see what your max monthly payment will be on a mortgage. Now, this is not nothing a lender will tell you. This is something me personally, as your friend, as somebody that wants to help you, is telling you. Don't spend more than 30% on a loan payment. Trust me, you want to make sure that you are comfortable. You're not stressing about making payments every single month. And you want to have enough to be able to save. You want to have enough to go on vacation, to, do things that you like doing and not just paying for a house. So something else, that payment of $2,850, whatever your monthly payment is on a mortgage, there's some things that you're going to want to know that is in that payment, because that $2,850 isn't just going to pay for the house. And here's what I mean by that. So 35% of that payment is going to be in interest. Now, here's the thing. My numbers here, what I have on this graph, it might be different than what your payment is. You might have a different interest rate. You might have a different type of loan, but this is just for a generalized idea. So interest is going to be a big part of your monthly payment. Well, what is interest? So interest is the additional money that you're going to pay to your lender in exchange for him giving you money to buy this house. It's pretty much extra money you're going to pay on top of the house. The higher your interest rate is, the more money you're going to end up paying to your lender. So keep that in mind. Also, even if you get a high interest rate now and you decide to buy a house in a market where there are high interest rates, you can eventually refinance, which will lower your payments and the interest rate. We won't get into that right now, but just keep that in mind. A lot of people are scared sometimes to buy a house if there's a high interest rate, but just keep in mind you're not locked in on that interest rate. You can always refinance and get a better interest rate in the future. So what is the next thing? The next thing is the principal. Principal is simply the amount of money you're going to borrow when you first take out the loan. So you're going to hear a lot of people give you advice on telling you pay extra payments towards the principal. That's literally just putting extra payments that goes to pay directly towards the house. The next thing is going to be homeowners insurance. Homeowners insurance is definitely important. you're going to want it because it's going to protect you against, just things that might happen, fires, floods, things like that. So homeowner insurance is definitely a 100% thing you're going to want. Now, another thing I would definitely recommend, which this isn't going to be inside your loan payment. This is something outside of your loan payment, but it's something you can get to protect you. It's going to help give you peace of mind. It's called a term life insurance policy. Now, you can get a term life insurance policy, $350,000, $400,000 and pay a very small amount for that every single month. And what that does is if you were to pass away, your family, your beneficiaries will get that money and they can use it to pay off the house or use it for whatever it is that they need to take care of themselves if you were to pass away. So definitely look at getting a term life insurance policy. It is something I would definitely recommend any and everybody to get. I'm not an insurance agent, so I can't sell you one. But if you need any recommendations to some agents, let me know. So the next thing you're going to want is something called looking at your HOA. So that's going to be a part of your payment if you buy a house that's in an HOA. And an HOA is short for a homeowners association. Now, there's benefits and disadvantages of buying into one, but just keep in mind, I think in my opinion, they do more good than harm, and they're going to help keep the values of your property up. They keep the neighborhood clean, and they're also great for getting the community together. A good HOA will hold, get-togethers and all kinds of stuff. So definitely keep that in mind. There are disadvantages. I'll make a video at a later date going over disadvantages of an HOA, but for the most part, just keep that in mind. Now, 8% will just be just miscellaneous stuff. There's maybe stuff in your state that I don't know about, and there's other things you can add into your loan, and 8% I thought was just a good percentage of miscellaneous. So there are also going to be something called upfront costs. Now, one of the things that is an upfront cost is your down payment. And it's important for you to plan this because if you don't have the down payment, you're not going to be able to get the loan. Now, there are different types of loans and there's different types of down payments. So a good example of this, how much is a down payment? When you're considering your down payment, you need to know there are a few different types of loans with different parameters. So what type of loans are there? There are something called conventional loans. Now, the minimum down payment required on a conventional loan is about 3%. And here's the other thing, though. If you have a lower credit score than required, or if your debt to income is a little bit higher, you might be required to put a little bit more down. But just keep in mind that conventional loans are really good loans, and they're great for getting into with a low down payment. Now, the next one is going to be a FHA loan. FHA loans have lower credit and down payment requirements for qualified home buyers. An example of a minimum required down payment for an FHA loan is only 3.5% of the purchase price of the home. So definitely, check into FHA loans. They're great to get to. And then the last one I want to go over is a VA home loan. Now, if you are a veteran and you haven't used a VA home loan yet, you can actually use this. It's the VA funding fee is just a one-time payment that a veteran, service member, or survivor pays on a VA-backed or VA direct home loan. The fee helps to lower the cost of the loan for U.S. taxpayers. Closing costs can range from 1.5. It says 23%. It should be 2%. Don't take that 23% as anything. It's 1.5% to 2%. Closing costs is all the paperwork required to buy a house and all the other stuff, if you're using a real estate agent, things like that, which closing costs, as a buyer, you don't usually pay really anything to use a real estate agent. So if you're a buyer, definitely reach out to an agent because having one will save you a lot of money. Home inspections, those are out-of-pocket costs, and you have to consider getting one. Home inspections are very important to get, and they can run anywhere from $450 to $800 per home inspection. Now, if you don't buy the house because of something you found in the home inspection, you still got to come out of pocket and pay for that home inspection. It's not something that the home inspector will do with the hopes that you're going to buy the house. So definitely keep that in mind. Make sure that you get a home inspection. So I want to give you a home buying checklist. I created this checklist so that you can have a clear understanding of the process. Go to the description of this video. You're going to find the link where you can get it and download it. So the first thing you're going to want to do when you're going through this process is, one, write out your max allowable monthly payment, figure that out. Know what you can afford and not what somebody tells you that you can afford. You know your expenses better than anybody else, and you know what you're going to be able to afford. You're going to want to know the costs associated with buying a home. We just went over a few of them. And get excited for your journey. This is a big purchase. It's going to be one of the biggest purchases in your lifetime. And just be excited. Make sure that you have fun in this process. Now, the next step is you're going to want to find out if you can actually get qualified for a mortgage. You don't want to start looking for houses without knowing whether or not you can get qualified. Knowing if you can get qualified for a mortgage is a great idea. You can find out how much money you can get qualified for. You don't want to start your home search and fall in love with the property and then find out you can't buy it because you weren't qualified for that amount of money. And to do this, get with a reputable lender. Make sure you use somebody that knows what they're doing and has a good reputation in your community. If you need help, definitely reach out to me. I have some really good recommendations. Using a mortgage broker gives you more opportunities to see different loans that you might not know existed. Going to a local bank is another good idea, and having a really good relationship with your banker, it can set you up for help in the future. If you get a good relationship with your banker, if you ever need a car in the future, having a good banker will just set you up for really good rates and stuff. I like the idea of having relationships with professionals, having those relationships that will last a long time and will benefit both of you. Before you go talk to a lender, what I want you to do is get all your documents together that they're going to ask for. This is just going to take a lot of stress off of you. And some of the things that the lender is going to want is, one, they're going to want the last 60 to 90 days worth of your pay stubs. They're also going to want 2 years worth of your W-2s or 3 years worth of your 1099s if you're a contractor. Now, each lender is different. Some might only need 1 or some might only need 2. Just keep that in mind. But a good rule of thumb, just use this. And 3, you're going to want 3 months worth of your bank statements. And last thing, a government ID. So those are the main things that I would go ahead and start getting together now before you go and talk to a lender. If you need help with going in the right direction, again, go to my description. There is a consultation form in there. We can jump on a call and I can help you with your process, and we'll get you going. If you're not in Oklahoma, still fill out that consultation form, because I literally have connections all over every single state. And I'll make sure you get connected with a top level professional in your area. Once you go through the process of getting pre-approved for the loan and you gave all of your documents needed, you're going to be pre-approved. And there's benefits of getting pre-approved. You're going to know how much house you can afford. That's always a good thing to know. And just because you're approved for a certain amount doesn't mean you have to use the total. So if you're approved for $400,000 as an example, you don't have to use the full amount. You find a house, for $320,000, you can still only pay $320,000. $400,000 is just the max that you can use. And also, getting pre-approved will let you know how much money you need down. So what can you expect? So you're gonna go and you're gonna start applying with different lenders. It's gonna take about 25 to 30 minutes to fill out the application. And you're also gonna fill out something called a credit app. This will lower your credit score just a little bit, typically 5 to 8 points. After you fill out your credit application, it's going to take 40 to 50 days for your pre-approval letters to come through. Once you get your pre-approval letters, you can start comparing the different options you have on buying. This will be the different types of loans and etc. But here are things you don't want to do after you get your pre-approval letter. These things that we're about to go over, if you have a pre-approval letter and you do these things, it could compromise your loan. you could actually lose that pre-approval. So one of the things is you don't want to quit your job or resign. If you're trying to buy a house and then relocate to a different state, make sure you close on your house before you relocate or quit your job or resign or even transfer jobs. You don't want to do anything that'll jeopardize this process. Now, if you're relocating to a different state, feel free to reach out to a realtor. Having a realtor on your side will definitely help you out. You can go ahead and text me. I have connections again all over the United States. If you're planning on moving here to Oklahoma, I got you. The next thing is don't make any big major purchases. Don't go buy a new car, an RV or boat or anything like that. This can actually flag your credit profile. It can literally forfeit your pre-approval. So make sure you keep that in mind. And some of the things to avoid, don't get any late payments on any of your accounts on your credit report. Don't move any large amounts of money between different accounts. And don't pay off any debts. That sounds crazy, but if you have any debts, this actually contributes to your credit score. And if you pay it off, it can actually lower your score, which will actually hurt your pre-approval. So you're going to want to use a licensed realtor. Again, you don't have to, but using a realtor is a really, really good idea. They can give you advice on a lot of things that's going to protect you. And don't use a realtor that's representing the seller of the house that you're interested in. If you're making an offer on a house, don't use the realtor that has the house listed and is working for the homeowner. Why? This is called a dual agent. Now, you can use that agent, but you don't want to because that agent, their best interest is in the seller. They're going to try to get the seller the most amount of money for that property. And the more money that that property sells for, the more that they get paid. So you're going to want to use an agent that is on your side and represents you and is going to try to get the best price for you, not the seller. So just keep that in mind. Again, contact me. Again, I have contacts of the top real estate agents in just about every single market you can think of. And I have referred so many people that watch my videos to other agents, and those agents will help you. And those other agents will help you get in the right situation and process. And again, if you are in Oklahoma and you need representation, just reach out to me. I'm a licensed agent here. So where can you find agents? One, again, you have me, guys. You have me. I'm right here for you. So you can also go to realtor.com. You can go to Zillow. You can do a Google search. Here's a few more tips that you can use. Get emotional with the houses that you look at. It can be easy to get emotional when you're looking at houses because, it's your first time. You really want this specific house. But if you get emotional, you put an offer in and your offer is rejected, sometimes that can hurt. But when you finally get an offer accepted, then I would suggest start getting emotional, Don't go over your max monthly payment. Again, just good rule of thumb, don't do it. Don't go over your lender guidelines. So if your lender says you're pre-approved for $400,000, you don't want to be looking at houses, at 420 or 450. You can, and then you can put an offer in under your 400,000, but you definitely want to try to stay in the range that your lender tells you. And consult with a licensed real estate agent. Again, having a real estate agent on your side is a great idea. And drink some coffee, guys. I mean, coffee is the go-to, especially when you're out looking at houses. And I just love coffee myself. And coffee is just great. Do not feel like you have to see every single home on the market. There's a ton of homes out there you can look at. And I've learned that if you look at more than 3 or 4 houses, you're going to start getting something called paralysis by analysis. Only make offers on homes you like. Some people are like, you know what, I like this house, but I really don't like it a lot. Make sure you actually like the house if you put an offer in on it. And also keep in mind that as soon as you make an offer, if that offer is accepted, it becomes a legally binding agreement. So make only one offer at a time. And these are some tips on making your offer. Make your offer in writing. This is going to show you're serious. Don't verbalize your offer. You can do something called a letter of intent, just saying, hey, I want to buy this property. and this is my offer here. Just doing that makes you seem more serious. Make your offer competitive. And if you don't know how to make an offer competitive, feel free to reach out to me. And make sure you use compliant contracts and documents. Having compliant contracts and documents protects you and protects the seller, but most importantly is going to protect you. And also let the seller know you're pre-approved. This is something you can do by showing a proof of funds, which is your pre-approval letter. This lets them know that, hey, this person's pre-approved. They're actually ready to buy a house. This person's serious. You're going to want to make sure you start getting homeowner insurance lined up. Why is this important? What does homeowner insurance do? Homeowners insurance protects you against fire, floods, natural disasters, and etc. And again, like I mentioned earlier, I recommend getting a term life insurance policy. If you need some recommendations on these, definitely reach out to me. And shop around for homeowners insurance. There's different options out there, different price ranges. Reach out to me again if you need help with finding a good insurance agent and provide homeowners insurance. Now, the next thing is your appraisal. Before you close on the house, your lender is going to order this appraisal. Now, what is the purpose of an appraisal? So a home appraisal is a process through which a real estate appraiser lets you know what the home value is. Very, very important that your offer is based off of comparables. And here's why. Let's say you fall in love with the house and the price is listed at is $450,000. You decide to go ahead and make your offer at $430,000, which is below the offer, and it's accepted. Then you go through the process and order the appraisal, and the appraisal comes back that the home is only worth $425,000. In this situation, there's a $5,000 difference there, meaning either the seller will have to lower the price of the property even more, or you're going to have to come out of pocket that $5,000 so that you can get down to your appraisal number. Getting an appraisal is a great idea because it's going to ensure you get a fair price for the property. There's still a little bit more in this video we're going to go over, but if you need help, if you are in the process of buying a house, please call or text me. You can also fill out a buyer consultation form in the description. Subscribe to my YouTube channel, guys. I would really appreciate you doing that. And I'm going to have content coming out for all kinds of stuff real estate related. So once you get your appraisal back, though, soon after you're going to be getting a letter stating you're clear to close. Then you're going to be able to schedule your final walkthrough of the home. Doing this is important because let's say from the time that you made your offer and it was accepted and you initially walked through the property, let's say a month went by, and after that month, you're clear to close. You're going to want to do this final walkthrough because during that month, something could have happened inside the property. Let's say somebody went inside and, took out, the refrigerator or put a hole in the wall. You want to make sure before you close on this, you do a final walkthrough of the home. And then it's time for you to close. So these are the final steps. Schedule your closing day. This is going to be an awesome time for you. Your closing day will be scheduled at the title company that you use. You as a buyer will usually be able to pick the title company you want to use. Sometimes, though, the seller will want to pick the title company. It's something you guys are going to have to agree to. You're going to be able to review all of the documents at the title company on the closing day. Definitely read through everything. Make sure you're getting everything that was agreed to and make copies of everything. And then you're going to be able to get the keys from the owner. Now, you can agree, make sure it's in writing on the contract to either get the keys at the title company in exchange, or you can exchange at the house. I personally recommend doing it at the title company. Now, here's some additional tips for you. When you finally close on your house, take pictures, create memories, guys. This is a really exciting time for you. After you've been in the house for a few weeks, months, make sure you keep the property nice. If you're, starting a family, eventually you're probably going to want to upsize and get something a little bigger. Maybe you start having children and you need to get extra bedrooms. You might want to sell that property and get something else. And if you keep the property nice, it's going to hold the value. And pay extra payments to the principal whenever you can. I definitely recommend this. paying extra payments to the principal is a great idea, and is just ensures that you pay less in interest. All right, guys, I definitely appreciate you guys watching this. Please contact me if you're planning on buying or selling a home anytime in the near future, or even if you're planning on doing it, in a few years from now. I would love to connect with you. I would love to help you in your process. I love networking. I love helping first-time home buyers, and I love helping people sell properties. If you have one you need to sell, reach out to me. My phone number is right here at the bottom of the screen. Schedule your home buyer consultation with me. It's free. You can do it. There's a link in the description. I really appreciate it. Take it easy.